What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 61. These are the trades for February 13th, 2024. So let's go ahead and get into it. All right, so look, you're only as strong as your weakest link. So therefore, you need to aggressively attack your weakest trading traits. Because I've been on the road to success for a while, but it seems like every time I kind of get going, the thing that pulls me back is my weakest trading trait. And for me, that's respecting my loss limits. That's one of the biggest things that I'm working on for this year. So after today's trades, I kind of came to a moment of clarity and figured out exactly why I'm not respecting my loss limit. And the reason is I just don't like losing, and I don't like being able to not make it right. That really bothers me, and it makes me feel like whatever I'm doing in terms of the trades that I made, if I take my losses and I hit my loss limit, I feel like for that day I failed. Because see, I'm trying to attach success or failure to the results of my trade, but that shouldn't be it. It should be me judging myself based on whether or not I follow my trading plan the right way, or if I follow my trading plan the wrong way. The money aspect of it, or hitting my loss limits or not, shouldn't be the main determining factor of me trying to figure out whether or not I'm good at what I'm doing. That's very important. And then, what I'm really starting to realize is that managing your failures is really what trading is all about, because I don't know any trader that doesn't take losses. Losses are just a part of the game. I know a lot of traders that make money, but it's harder to keep it than it is to make it. And that's because you have to manage your losses the right way. And when you get down, you have to kind of cut yourself off and say, look, I'm not feeling it today. I'm out of rhythm for whatever reason. So let me go ahead and just let it go right here. Come back tomorrow, studied up, practiced up, and then just look to do better the next time. So that's really what I'm starting to learn, so you got to manage your failures gracefully and very strategically. That's so important. Think about the risk first and then the profit second. So I need to remember that trading really isn't about one day in particular. It's 200 plus trading days every year. So don't expect to have every day go your way. Every day is not going to be a green day. But when you do run into those red days, you have to manage it strategically and make sure that you keep those losses in check, because you just really want to make sure you survive. All right. You want to stay solvent financially and mentally when it comes to the trading game, because every day is not going to be your best day. And that's important to remember. But what I really started thinking about was, okay, if I want to respect my limits, I need to change my behavior. So I think one of the reasons I keep trading is because I just feel like I don't want to stop. I want to keep going. So I said, okay, if that's how I'm feeling, here are some alternatives that I can use to kind of replace live trading with something else. So the first thing I could do is just switch to demo trading if you really want to keep going. I need to ask myself, am I trading because I really want to trade, or am I trading because I want to make that money back? Now, if I'm trading because I really want to, then okay, I'll trade demo because trading is trading, right? But if I'm trading to make that money back, that means I'm coming at it from the wrong perspective. I'm thinking about the money first and not the trades. So if I'm ever in that type of scenario, I just need to pretty much just write my notes for the trades that I made that day, and then turn the computer off and just go do something else until 4 o'clock when the market closes. Then I could come back, reassess my trades that I made, figure out what went right, what went wrong, and then get a plan together to figure out how to make these things better. So those are the alternatives that I want to use, because in order to really switch things up, you have to change your behavior. And another thing that I noticed, practice really matters. Because see, I do simulated back testing sessions where I practice the same way I would if I was trading live. The only difference is when I'm in the practice session, let's say I do hit my loss limit after I make a couple of trades. Even in practice, I won't respect that, because I believe that, well, I'm practicing, so I should keep going because I'm here to get better as a trader and learn more setups. But it's like, and I kind of start thinking to myself, all right, when I trade live, I'm just going to make the right decision. All right, it's no big deal. But what I've learned is that that's not really how it works. If you don't practice something when you're doing it, when it doesn't matter, it's going to be hard for you to actually make that a consistent behavior when you're actually doing it when it does matter and you're trading live, because you just don't have that muscle memory ingrained into your system yet. And you got to get that under your belt if you expect to be able to actually do these things in a real live trading session. So that's what I need to work on, just getting my practice better and just making sure that my overall entire trading plan is good to go. So I think if I can do all of those things, I should be able to improve my results. So with that being said, let's go ahead and talk about these trades that I made today. I think I made 13 trades. So let's get into it. All right, so for trade number one, right here, this was a pre-market trade right before the news came out, because I was assuming that prices would respect the zone, because usually when news comes out, that's what prices do. You know, I'm not gonna say all of the time, but I say like maybe the majority of the time, if prices are doing a certain type of movement, like let's say it's a very strong uptrend, more than likely when the news comes out, prices are gonna continue moving in that direction. But you never really know whether or not it'll be a spike to the other direction before your move happens. And that's exactly what I got caught up in today, because at trade one, I went short here at the top of the zone, right? That's what I should be doing based on my trading plan. We're seeing a zone between 810 and then 840. All right, so prices got back up to the top. They formed a double top right here. So then I shorted once they broke back down below below support. All right, and that would be a great entry at any other time of the day. But right before the news came out, it just made that entry a lot riskier. And I understood that when I was taking the trade, but I was like, okay, price action is moving in my favor, so it should move in my direction, which it ultimately did, but not before it shot up to the top of the zone, had a little small false breakout, and then it came back down. So that was pretty frustrating, because I felt like I judged the market the right way, but that's not all that it takes to have a successful trade. You have to judge the market the right way and also get in at the proper time. Timing and price is very important to make sure that your trades go right. So that's one of the biggest lessons I learned right there on trade number one. So then we come back to when the market opens at 9:30. Well, actually, number two is actually another pre-market trade. So let's talk about that. So at 2, I went long here expecting a bounce off of support. Now, this trade actually was successful, but I was a little bit too late on my entry. I took the second entry and not the first entry. And that's one of my biggest rules, which is anytime you take that second entry, just understand that the probabilities of that trade working decrease dramatically. Because when I see a setup, these setups work, but the window of opportunity doesn't stay open forever. It's like, look, you have a chance to get this trade. If you get it, you get it. If you don't, just wait for the next one. But don't try and chase the market and force that trade to work once the window of opportunity has already passed. And that's pretty much what went wrong right here. I had the opportunity to get in on the recess of this higher low, either on this candle right here or this candle right here, and I would have been more than able to get my 20 points that I was looking for. But I didn't do that, and I went long as prices came back after all of the up movement already happened. So really, I'm going long in front of selling momentum and not going long into the strength of the buying that lasted for those few candles right there. So that's really important. You got to make sure that if you want to get in, I have to get in at the right possible prices and at the right possible time. Very important. So then let's talk about trade number 3. So trade number 3, this was actually a really good trade, but the execution and how I exited the trade wasn't necessarily the best. And this is why. See, I went long here based on the higher low retest. Okay, so we had this higher low get formed right here. Prices came back to retest it. They broke past it for a little bit, but once they got back above that level with a long tail candle wick, I was like, okay, I see where the momentum is going. So let me ride that momentum real quick and look for my scalp target to get hit. All right. So prices came within 1 point of my target, but the problem was I just didn't take it. Now, this was a scenario where I didn't even really have time to hesitate. You know, I hesitated for like a split second, and then the market came back to break even, because this was right after the market opened. I think this was maybe like at 9:32. So the market was really moving. And by the time I thought about, okay, it came 1 point within my target, maybe I should get out. I don't know. By that time, it was already back down to like maybe 3 or 4 points. And I decided to get out right then before it came back to break even. So usually I would say that I have to be aggressive when it comes to my exits, but I agree with that. But in this scenario, I'm like, man, it was just moving so fast that the only thing I could really do and say for next time is don't hesitate. If you have what you have, take profits right there and just live with it and wait for the next best opportunity. You know, don't look on hope to save you. Hope is not what you want in the market. You want to have certainty. You want to know exactly what you want to do before you do it. So when you get into the trade, say, hey, okay, this is my target that I'm looking for. But if I don't get that target and the market offers me this, I'm willing to take that amount too, even though it might be smaller than what I originally planned for. Because sometimes the market is just going to give you what it wants to give you. Sometimes that's everything that you want. Sometimes it's half of what you want. Sometimes it's a quarter of what you want. But getting something is a lot better than getting nothing. And that's one of the biggest lessons I learned right here at Trade 3. Just make sure you don't hesitate. And when you're in the market, grab those profits and lock them in while you still have them. Because everything that goes up usually comes down. So remember that. All right, so let's talk about part 3. So trade number 4. So right here, we did form more of a consolidation zone, but not really. You know, in the moment, I thought that's what it was. But when I really look back on it, this was more of a double bottom that was just extended, where we saw prices hit off a support multiple times. So right here, when prices got to the top of the zone, I shorted. I was like, man, I don't know. This just doesn't look like the best possible zone. So when prices came back up to break even, I decided to get out right there. Now, on trades 5 and 6 up here, this was pretty interesting because what I need to remember is that mature higher lows have a lower probability of working when going long. Now, what I call a mature higher low is basically a higher low that occurs at the top of a movement, the top of an up move, and it already occurs after the up move is really overextended. And if you think about it, that makes sense. Like, more than likely, these higher lows have a higher chance of getting broken through, because who wants to go long at the highest prices of the swing? You know, only if you feel like the market might move higher, but that doesn't happen on every upswing. You know, it's ups and downs, it's ebbs and flows to the market. That's how things go. So when you get all the way up to the top of that move and you see that higher low, sometimes these mature higher lows do work and lead to continuation, but a lot of the times they don't. So what I have to do is just really think a little bit more and reconsider whether or not I want to take this trade. And I think that really goes back to just FOMO, fear of missing out. On trades 5 and 6, I felt as though, like, if I don't take this higher low trade, I might not have any opportunity for the rest of the day. That's a small part of me felt that way, but that's not really the case, because if you look at what happened at 7, 8, and 9, you know, it was plenty of opportunity to trade this zone right here, but I didn't know that at the time. But looking back on it, it's been like that every time I had thoughts like this, like, oh man, this might be my only chance. That's never the case. The market is going to give you opportunity throughout the day, and there's going to be plenty of it, and all you need is 1 or 2 good trades, and boom, you're good for the day. So don't ever think that you have to take the trade that's in front of you. If you don't like that trade, you don't have to take it. Just go ahead and skip it and wait for the next best opportunity. And that's what I really learned on 5 and 6. So then I come back on 7, 8, and 9, and I made some pretty good decisions. Now on 7, I shorted here as prices came back to retest a prior lower high, because I was buying at 5 and 6, and I was like, well, the overall trend for the day is down. We had a little bit of a pullback, but it looks like it's starting to fizzle out a little bit. Then we had this lower high that got established right here. So I said, okay, if prices come back and retest that level, that's where I want to short from, and then just take it back down to the lows of the zone that got established right here. So that's exactly what I did on trade 7. Now on trade 8, I waited for the same exact scenario. I saw that the market conditions were still the same. So I took the same trade at trade number 8, shorted from the top of the zone, and took it back down to the bottom. I did the same thing right here on trade number 9, but trade 9 was different because we really formed more of a higher low right here, because notice how every time we came back down to the lows, we came back into this little zone right here. But on trade number 9, this was the first time where we stayed above the zone. So that right there is a higher low, and we can already see that prices have been moving higher. They were pulling back, but the overall movement for that specific time was still up. So I said, okay, I see my setup, but I don't want to force it. I had 2 good trades in a row at 7 and 8. So let me not force it on trade 9. If things come back to break even, I'll just get out at my entry and call it. So that's pretty much the idea that I had on trade 9. And I think I made the right decision right there. And that's very important, because whenever you are short and you see a higher low get formed, no matter how you might feel about that short trade, you got to get out of it, because that higher low means that the market has a very, very strong possibility of moving to the upside a lot sooner than later. So make sure you get out of your short trades in a scenario like that. And that's what I learned right there. So if we talk about trade number 10, right here, I went long based on the higher low, right? It's a higher low right here. So I expect the prices to come back, retest it, and then the uptrend continues. That's what I was expecting. But the only thing was, prices came back and they had a little bounce, but they bounced off of the lowermost higher low that got formed in this area. Now, a lot of times it'll only be one higher low within the vicinity. Like if you look at 5 and 6, this higher low is the only one that got formed. So when I'm looking at that higher low, that's exactly where I need to go long from if I want to take an entry off of that level. Now, when it comes to trade 10, what happened right here is that there were two higher lows within a close proximity with one another. So whenever two higher lows are really that close to one another, you want to make sure that you take the higher low trade from the lowermost higher low, because if you think about it, you're buying low. All right, when I bought right here at the second higher low, I was buying a little bit high, but I thought because the trend was strong that my entry would be okay. But always want to make sure that no matter how strong you think the trend might be, you still got to have a great entry and you got to get in at the right time. That's very important. Now on trade 11, I pretty much ran into the same scenario where I tried to take that trade because I thought that this overall area was a zone at the time, because I saw one touch right here, two touches right here, three touches, and four touches. So I said, okay, this is like the top level of resistance, and these are the clear levels of support below. So if I go long right there, that should be a good level for me to think, for me to see continuation and see some type of bounce back up to the upside. That's what I was thinking at the time. But now that I look back on it, it was really more so a double top more than it was an actual consolidation zone. And I kind of realized that only after the fact. But in the moment, I really thought it was a zone. And I think that's the biggest reason I took a loss right here. Because if you look at it, you have a double top followed by a lower high. And then I went long. So anytime you see a lower high, you really don't want to go long. The same way we talked about how if you see a higher low, you really don't want to go short. So that just goes back to respecting the price action that's in front of you. Is very important. Always respect the market. Don't try and fight what your eyes are looking at. Always remember that. So then let's move on to trade number 12. So we see the downtrend continue. We come back into the zone that we established earlier. Now, once we made a lower high at the top of the zone, I was like, okay, if prices come back and retest that lower high and retest the top of the zone, that's exactly where I want to short from. And that's pretty much what I was able to do on trade 12. Shorted from the top of the zone and then took it back down to the bottom. Now on 13, what I really like to do when it comes to trading, I like to always go long when I see a higher low form right below the zone. But see, the thing about this trade was that the higher low candle that I was looking to go long on, it didn't close before I entered my trade. And that's one of the biggest things I also talk about too, which is make sure the candle closes before you enter, no matter how strong you think that move might be, because you always want to make sure that the market doesn't fake you out. Because I've seen scenarios where the candle looks good, it's green right when you enter, but by the time that it closes, it's back in the red again, and the entire scenario that you were looking at is now different and things have changed. And it could be really easy to kind of freeze up in a moment like that, because you're like, whoa, it was just good 30 seconds ago. I mean, is it really gonna go down like that? And then as soon as you start thinking that, that's when the market goes against you. So you don't want to even get yourself going down that road, because you know you might hesitate and you might freeze up. You know, you're still human, so you don't want to put yourself in a scenario that's too challenging. So that's the biggest lesson I learned right here. Make sure the candle closes before you go long, because if this candle would have closed like it did right here and it was completely red, I would have never even fathomed getting into that trade right there, because it wasn't what I thought it was going to turn out to be. So always make sure you stay patient and wait until that candle closes. And if you do, you should be good. So that was my last trade for the day. As far as my loss limits go, my loss limit was supposed to be 40 points. I didn't honor that loss limit today. I ended up losing 60 points. So that's something I'm still working on. But like I was talking about earlier in the video, I finally figured out exactly where my weaknesses are, and now it's just up to me to develop a plan to be able to attack these weaknesses. And before we get out of here, the last thing that I want to talk about is pivotal points that occur in a trading session and what I've learned from those pivotal points and what I can do going forward to help make myself better. So I started off the day rough. You know, trades 1 through 3 were all losses. Well, not 3 was break even, but it could have been a gain that turned into a break even. So I look at that, to me, as a loss. So I started off rough. You know, I took losses between trades 1 through 6. You know, that was tough. But then on 7, 8, and 9, I was able to come back and make trades good enough to make all of those losses back. Now, here's what I need to start realizing. On the days where I am down and I get close to hitting my risk limit, but I don't hit it and somehow I'm able to make all of those losses back, if I get back to break even, that's where I should stop, call it a day, and cut off the platform. Because I've had a lot of days like this one right here, what we're looking at, where, okay, I started off rough, started off a little rocky, but then I was able to come back, make those trades back, make those profits back, and get back to break even. But see, then my confidence starts to get a little bit out of control because I start thinking, okay, if I made this money back, I can keep going and hit my profit goal for today. But a lot of times that's just not how it goes. And it's not because I can't do it, but it's because mentally I'm not in the right mind state to be able to do it. I started off rocky. I was able to make it back. Well, if you started off rocky, then more than likely it means that something is just off. You're not in sync with the market for whatever reason that might be, but you were able to get in sync for a few trades and make that money back. But before you get back out of rhythm with the market, just stop right there. Figure out why you were out of rhythm and then practice and work on that night. Then come back the next day and try it again. You know, if you're in rhythm, you're in rhythm. But if you're not, you got to make sure that you don't try and go further than you need to. So that was the biggest problem today. I came to this moment in the market where I was back at break even and I knew I had a decision to make. And I decided, you know what? I could stop right here, but I'm going to keep going because I feel like I can make more money. Don't let the money entice you to make irrational decisions. You know, that's one of the biggest things I've been learning. You got to do what works for you and don't worry about the money results. Trading is a game of ups and downs. You have wins and losses, but overall, when you look at the bigger picture, if you make the right decisions and you follow your trading plan, you'll probably come out with profitable results. But don't focus on what you're getting from trade to trade and day to day. Just focus on the overall big picture and making the right decision and following your plan every single day. So that's the biggest thing I learned today, I believe, which is if you're down and you hit your loss limit, you stop. But if you don't hit your loss limit and you can make those losses back, you stop at break even and you call it a day. So I hope you guys were able to learn a lot from this video because I know I learned a lot from these trades and I think that'll help me a lot going forward into the future. I'll be back on February 14th ready to break down the trades from day 62. But until then, you guys have a good one, study hard, and take it easy.